Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, November 9th, 2021. I'm going to start out with an update on the equity markets. Certainly warrants one today. We had the sell signal with breakdowns on all the major indexes that I've been tracking lately. So I'll do an update there, followed up by updates on natural gas, oil, copper, gold, and a couple individual trade ideas, including the QUBT trade idea I put out there today, and another setup or actionable trade on DDD. So I'll get to those in a second. All right, so starting out here, this is QQQ 60-minute chart. Here's our primary uptrend line right here, and that was taken out this morning. We had an impulsive move down. We kind of consolidated on the trend line for a little bit, but we're below it now. And as I said this morning, if you want to be safe, wait for a break at today's earlier lows, and that we pretty much we're right there right now, pretty much testing those lows. So I think just a little bit more downside once we clearly take out the lows. We had a little spike right there, but I mean, this is a 1 minute candle right here. Each of these candles, 1 minute candles. So that's a brief spike down. So once we take that out with conviction, we should, I believe, see the next wave of selling. So almost there, a little bit more work to be done, and then we can give a pretty solid check mark. Right now, with the way this market's been, just resilient as heck, you have to put a little question mark by it because it's not been followed with impulsive selling. And again, we're in relative close proximity, but if you really take it for what it's worth, it's a breakdown followed by a back test. I'm back to the 60-minute time frame that I started on. These are hourly candles. And so breakdown, back test, and we're starting to move lower. And again, there's going to be some stops along the way. There's certainly some minor support right around here, give or take, around that 389, we'll call it 390-ish level. But I still maintain these targets that I gave you before. As you can see, T1, 2, 3, and 4. And let's look at SPY as well. SPY 60-minute chart. There's a nice clean up trend line. Zoom in nice and tight. You can see the breakdown candle today, followed by a back test, and we're moving lower. So, and we've taken out the previous lows of the day as well. So that was a low this morning when I got the post out to you, and right after the open. And here's the subsequent low, which was just taken out, and that's it. So we're close enough. Just like QQQ, we're really, we're talking one brief spike down through there. So we're going to need to see a run through there and a solid 1 minute close or 5 minute candle close there. But I would give it a very, very good chance it's going to happen. So if you're, fully short now, I see nothing wrong with that. In fact, that's where I think it's probably fine to be. But if you want to be safe, wait for a solid break below those lows right there. You can also see a little bit of minor support right here on these candles around 465, but I'd rather be short at this point and get whipped out in a whipsaw signal. And I talked about that. What does it look like if the breakout fails? A solid move, not just a little punch below here, but a solid, more than at least one solid 60-minute close up above the trend line, not right on it. And of course, if you keep going up, then that is going to be even more bullish, meaning this would have been proved to be a false breakdown or whipsaw signal. But right now, it's a breakdown, so let's just leave it at that. Move on. IWM, there's your 60-minute uptrend line with your divergences and all that were on there. I've been showing you the RTY chart lately, but same thing on IWM. If you trade ETFs instead of futures, there's your breakdown, impulsive move, a little bit of a flagging type action right now, and looking for another thrust down. I haven't really laid out targets on this 60-minute chart of IWM. I've given you some RTY, but let's say 230 would be a minimum target, minimum drop I think we're going to have here, and quite possibly come on down, as I've been talking about for a while, and hit this downtrend line right here. In fact, that was still the target from the last time. We had a breakdown there, and we had this crazy algo-driven ramp. I've seen this kind of behavior before. It kind of meshes with that QQQ wedge overthrow I'm talking about, which is now in play. There's the wedge overshoot. We had, if you recall, the wedge was drawn like this before, and we popped up, and now we're coming down through it impulsively, And minimum target right here on NQ. This is a 60-minute chart, hourly candles here on NQ, the Nasdaq 100 futures. You can see that breakdown's nice and clean so far. And a little bit of flagging type action right here, some consolidation that came after the breakdown, but still below the trend line, and looking for moves down to each and all of these targets. I think will come on down quite likely to that larger uptrend line you can see here on NQ, that trend line that comes off the early October lows right there, October 4th lows, couple reactions, and that if we get there, it's going to take us about 5% lower. And that's NQ. Let's look at ES. Same thing, uptrend line, 60-minute chart, divergence line right there. So we really never had a wedge overshoot. We just kept the divergence intact. Breakdown, and again, some minor support there, but I think we'll come down to at least this target right here, 45.45 on ES if you're an ES trader. And again, it's a very shallow target. It's only a pullback target. It's about 3% from the breakdown point, and quite likely I think we're going to do more than that. That's why I've laid out some additional targets. And let's see, first things first, let's see how the day ends. Let's see how we follow through tomorrow and throughout this week. If we can start to get some impulsive selling, and I see enough on the daily charts, and then I have to also take a look at the FANGs, the market leading stocks. I have to look at different sectors. That will then help me gauge whether this is just going to be a quick pullback trade, get your 2, 3, 4, 5% and get out and go long again, or if it's going to morph into something much larger, in which case I'll turn my focus to the longer term charts, 2-hour candles, daily candlesticks, and maybe even the weekly charts, depending on what happens. RTY, small cap futures, beautiful little wedge right there, bearish rising wedge, a little divergence also right here on the RSI. You've been building the divergence for a while. It started to steepen there. You had the divergence on the PPO, oversold levels on the overbought levels on the PPO and RSI, and pretty impulsive breakdown so far. So on a scale 1 to 10, this one's closer to a 10 than S&P 500 and Nasdaq 100, because you had the breakdown, a little kickback rally, and we're starting to move impulsively lower. Yeah, there's going to be probably some hiccups along the way at those levels I just showed you there, but at minimum, I think we're coming down to 2341, and most likely that larger uptrend line down below. So that's it on the indexes, and we'll follow up if these breakdowns stick. If they fail, regardless, I'll do an update either at the end of today or tomorrow morning. Okay, and as always, a stock market, although it's a collection of thousands of different stocks and companies, securities, as at least the Russell 2000 companies in there, 500 in the S&P 500, 100 in the Nasdaq 100, but you have many other asset classes, and I'm a big proponent of spreading out your bets. Some people focus and they only trade gold, they only trade the stock market indexes or ETFs, but I like to spread it around, because invariably you're going to be right on some of your trades at sometimes and wrong on others. So one of those I've been highlighting for quite a while now is natural gas. In fact, I mentioned here that we did have a objective short entry when we were forming this head and shoulders pattern right here, head and shoulders topping pattern. I mentioned one strategy is to go short when you see the formation of a right shoulder, and that means just push up here, and you can put a stop somewhat above, because if it goes up much more, you no longer have a head and shoulders pattern. You've now lost the symmetry of the pattern. The right shoulder has to remain below the head. And so that was a nice trade. We came right down to dual support levels recently, right there, the primary uptrend line, which I'm drawing here, and the neckline of the head and shoulders pattern. That gave you an opportunity as an active trader to maybe cover there, trade game a bounce. And usually on a head and shoulders, once the right shoulder is finalized, you get one last bounce up, then break down in the pattern. So as of today, this is our next objective short entry. We broke both the intersecting Neckline as well. I'm trying to grab a circle tool here. Every time I click on it, it doesn't take. We broke them both today. Here, I'll zoom in a little bit. I know it's sometimes hard to see in the videos, especially if you're watching those on a mobile device. But that's it right there. So these intersecting trend lines were taken out impulsively, which helps to validate the breakdown. However, as I mentioned before, and I'll mention it right now again, we have a pretty good support level right here at about 4,992, and that's where natural gas is consolidating. So once it gives that up, it will then have given up the ghost, and at that point, I'll have more confidence. In other words, yeah, is that a breakdown and a sell signal, break of the trend lines? Yes, but you have to give this a BOD or benefit of the doubt when you have a nice horizontal support level just below, and that's why we need to take out 4,992. Maybe we kick back test the neckline and the trend line from below. If so, that would be an objective short entry. Maybe not. This was already an impulsive breakdown, and natural gas, when it wants to run or fall, it can really run or fall. And in fact, it's down right now. Nothing big, about 5% right now. It was down more than that earlier. That's on the December contract. I'm showing on another screen. I might have another contract up. Showing an 8% drop. Either way, this is the one I'm going off right now, the December contracts. These need to be rolled soon, I believe. All right, the first or next target when 4,992 gets taken out is 4.435. That's the actual support level. You want to cover a hair above that, if that is your preferred target. And then you have this line here. Remember in the video I gave you the measured target of the pattern, which is the top of the head down to the neckline. That's your measured target, and that is this line here. I drew it there and moved it over here. That's what I do, and it comes in almost perfectly with my $4-ish target. It's 4.008, and so that's where I think nat gas is going at minimum. And don't forget, guys, I'm going to keep this video short. I didn't have my other chart program on stock charts queued up, but on natural gas, if we can get much below this trend line, even though this is just a little 120-minute chart, 2-hour, going back 6 months, this is also the primary uptrend line on the daily chart that I've been talking about on that other chart of nat gas futures, the longer term. So what I'm getting at, if we can get much below there, and especially a solid close, we're going to have broken a key uptrend line support on the more significant daily chart, triggering a more powerful sell signal, a trend reversal. But even if just this trade plays out, from the breakdown here today, and if we go down to that $4 level, you're talking a 23% or so drop in natural gas, and that's a pretty attractive trade. Update on crude oil. This one, it's just not getting the memo yet. I think it will get the memo very soon, and I'm talking about the memo that the stock market has broken down. Now, well, don't get me wrong. We already had a sell signal. I posted it recently. Crude broke down here, and I issued a sell signal on it there. Also mentioned an objective add-on or new short entry on the back test right there. And it's another kickback rally right about to the breakdown level. And you can also draw, it's not super validated, but you can draw a trend line off the highs, which we're pretty much testing now. And if we can get an impulsive leg down in the stock market in the next day or so here, or this week, I think that'll take crude down to that 78.90 target. It was already hit once. It was a target support level on the way down. This is just a typical reaction off there. Come on down there, and since we've already had a reaction on the initial tag, I would expect we break it next time. Maybe one more bounce, maybe not, but I still favor a move to at least 75, 72 in crude oil. And if you took a shot here, especially considering the breakdown in the stock market today, again, assuming that sticks, you're talking almost 10%, over 9.5% drop down to that 75, 72 target in CL crude futures. And I mentioned copper the other day as an objective long entry. We had a little divergent low right here into support, that 430 support right there. Uh, Copper held that. These are HG copper futures, by the way. We're looking at a 60-minute chart, hourly candles. We broke out and we're back testing. That's why I'm highlighting copper today. This is an objective long entry on the back test of the trend line. We already ran up to and effectively hit that 445-ish target right there and had a reaction pull back from there. So if we thrust up again, you could have a quick trade there or hold out, which I would favor, a breakout and then a run up here to 456. Especially if the stock market, we get a whipsaw signal. See, copper, at least in the past, it was pretty highly correlated to the stock market because obviously demand for copper goes up when economic growth is strong, when houses are getting built, and a lot of things that copper goes into. And so therefore it tends to follow the stock market. But lately everything's been kind of quirky. Plus, that's one reason I like trading commodities because if nothing else, they're not indexed to the S&P 500. They're not components. The commodities themselves aren't. And so they can march to their own drumbeat. And again, it's a way to diversify and spread it out. So, treat every chart on its own technicals. There it is. If you take a back test, well, you have support at the recent lows. You could have a relatively tight stop. And again, being that we already hit that, you could go at the 445, 446 level again, target that, or hold out for run up to that next target at 456 and change right there. And there's copper. I already showed you two ETFs, JJC and CPER, or technically speaking ETNs. This one broke out, back tested. So that was the case for that, to buy it on a back test with the PPO still in constructive or bullish territory at this point in time. Like anything else, don't get married to it. That's why I point these out. It's objective with a relatively tight stop below. And if you're a swing or trend trader, you could hold on for a break, even a run at and above those previous highs. Alrighty, next up, gold. Just a quick update there. It's GC. I like to look at the gold futures and looking good. We're almost to that 1838-ish big level right there. Effectively close enough. Look, if you want to take profits, I like this one still, and I think we'll, there's a chance we'll get at least another minor reaction there, but if we break out, that's going to be quite bullish. So I'm still liking gold. Again, if you want to actively trade, yeah, you can try to game a pullback. But if you're a swing or a position or trend trader, I think the odds for a breakout here in the coming days to weeks above that 1838 level are looking good, especially after this breakdown from the divergent high and the trend line break, and the fact that it didn't go very far. The buyer stepped in at one of the earlier support levels on that pullback, and so far have bought up gold pretty aggressively. And then I should just do an update on the euro for you, of course. And that also, remember, gold tends to move in line with the euro, and I've talked about that quite a bit. We've had a lot of reactions here off that 115.45 level, including the little whipsaw there, and that whipsaw, as I mentioned, put in a divergent low. Trying to get my line tool, divergent low, and so far moving up. Now, work to be done, and that work is to take out the 1629 level. We already hit it once there and had to pull back, so we need to take that out. If we do, euro bulls and gold bulls get a check mark. That should run us back to my 1688 target, which again, that was already hit a couple times as well. And so it would probably give you, get a reaction there again. It's still resistance. Resistance is resistance until unless taken out. And then boom, if we can break that, it should be pretty smooth sailing all the way up to there to that 117.90 resistance level. And that should again be bullish for gold. And silver, of course. I'll just skip over silver in this video. It's going to follow gold, give or take. Okay, and two individual stock trade ideas. QUBT I shared this morning, got out to you in pre-market. It was on a list. I had a list of about a half a dozen names that stood out yesterday. I'm going to share one other right now. The others may need a little work. but this is QUBT, quantum computing, and it popped pretty good. It's a relatively low volume stock, but volume's been increasing recently, and today was big volume. And again, it was a technical breakout. That was the whole point of it. It was up in pre-market, trading just above there. I gave you a range in which to go in, and you want to not, I would continue to buy. It's back testing right now. We're above the breakout's still intact. The stock is still up 13%, and we're right above the trend line. So I will say this is still an objective entry. We came close. We got up to, how far did we get? We got to high of the day, 890. I gave you a first target of 949. So close, but not there yet. And it still offers an objective entry. Now, let me say this. What happened is the market broke down. And so this thing started to go this morning, and then right after that the stock market broke down and we had a big leg down in QQQ. You can see this guy was running pretty good up to about 9:55 a.m. there, and then QQQ right at about the same time took a dump. And so a lot of forced selling. Obviously it's going to panic longs. It's going to cause probably did cause quite a few breakouts to fail. Certainly brought in the sellers for QUBT, but the breakout's still intact. And QUBT is not a component of the NASDAQ 100. It's not going to come under forced selling pressure there. And so therefore, again, it's a trade idea like anything else. If you're going to take it, I would not take it below the trend line. You can take it on or near a back test like where it is right now, but if it falls back below there, you can either use a tight stop, but I set a stop. The official stop is 615, which is just like a penny, I think penny below yesterday's closing price. Yeah, it closed at 616 yesterday, so that's where I put the stop there. And again, your stop should be dependent on where you bought it. If you chased it, higher up here this morning, you might consider a higher stop. And if you get it close to the trend line, again, I think it should hold. Because if it gets down to 615, it's clearly lost the trend line. The breakout has clearly failed, and that's why I'd let it go and maybe keep an eye on it and for another breakout. That breakout today, so far, again, is intact as of now. DDD is on a very comparable pattern. 3D Systems Corp. You got a nice clean uptrend line right here. This uptrend line comes off the September lows, September of 2020, correct? And we're right there now. So I can tell you it offers, it's down today about 13%. It got rejected off the top of this triangle pattern. Got quite a few reactions there. There's the high, distinct reaction there, a reaction there in the last couple days. Knocked down today, but you can buy it here at support. So there's two ways to trade this one. Here at support at the uptrend line, and or, when I say and or, it means if you're aggressive, you could take a full position there with a stop somewhat below. Max stop would be 25.84. And let it run. You get a better entry price that way, and you're hoping or holding for a breakout of the triangle pattern. The more conventional, a little more conservative method is to take maybe a half position here at support, and then another half if and when it breaks out. And the trend line, if you want to replicate the trend line, make sure to use log scaling on your chart. If not, what I would do is wait for a breakout of yesterday's high. Yesterday's high was 34.35, and so once it takes that, it's going to be yesterday's pivot high number one, and it's also going to have popped above the trend line again. And I think that time, if it can get back up there, I think the next time we pop that trend line, it's going to stick. What I mean by that, there was a little intraday pop, but it was faded as quick as it happened. And that's why you want to see, ideally, the highest probability is if you have a solid breakout that closes the day solidly above the trend line there. So again, it's an actionable trade as well as a trade setup. Actionable because you can go long here at support, or setup if you want to wait for breakout above the trend line, or a little of both if you want to split the difference and take a half position here and another half there. All right, guys, that's it. Those are the things I'm watching today. Let me go ahead and get the video out to you, and if anything else pops up or anything changes in the equity markets, I'll do my best to get that out to you as soon as possible. This has been Randy Finney with Right Side of the Chart. Have a great day.